Hello, my name is Kevin Giesland. I am crazy about rental properties. I am not a financial expert. I am not going to be persuading anyone to do anything in particular. I am simply giving examples based off past experiences and/or my opinions. Hopefully this helps you out in trying to decide what to do with a particular property. I've listened to many podcasts on a wonderful channel called Bigger Pockets. One of the things they talk about is the BRRRR method. Buy the property, rehab the property, so fix it up, new flooring, paint, whatever's necessary, rent out the property, refinance the property, so you go to a bank or mortgage company and they pay off the money that you use to purchase the home as well as the fix-up costs, and then repeat. The whole idea here is you're recycling money. Essentially, the way that this works, it's basically you're flipping a house, but instead of selling the house at the end of the process for one large amount buyout, you're actually getting a rental property that you can keep long term and make monthly income off of. My buddy and I found a property, and you always hear if it sounds too good to be true, it is. I always say that's not necessarily the case in real estate. We knew someone that knew someone. Their mother was getting into a nursing home. All they wanted to do was just pay the home off, period. That's it. So what we did, we were able to purchase this home for $53,000. Fix-up costs, flooring, paint, new appliances, everything else was about $12,000. So our total all in was $65,000. That's what we used to purchase the property as well as the fix-up. The appraisal came in at $85,000. We went to a bank. The banker was able to give us 80% of that $85,000, which is $68,000. So the banker gave us $68,000. We then paid off the line of credit that we had of $53,000, and we also paid ourselves back for the $12,000 that we were out of pocket to fix it up. That actually left us with $3,000. I love doing this method because there's different benefits that you get from it. In this particular case, we didn't necessarily knock out the park, but I don't have any issues with this whatsoever. We basically got a free house because the line of credit and the amount that we took out of our pocket to pay for the home, we paid ourselves back with the new loan. The cash flow isn't wonderful. It's only $150 a month, but at the end of the day, if you're out of pocket zero and could get $150 a month plus tax benefits, I don't see an issue with that. The third item here, $3,000 in our pocket. Again, that's just the new loan minus our total all-in cost. And then the last thing to kind of keep in mind is we still have equity in the home. Since the bank would only lend 80% of the appraised amount, we still have that additional equity. So the $85,000 minus the $68,000 loan that we got, we still have $17,000 in equity for that property. So if the $150 cash flow became an issue, or if we had to get rid of the property, we could always sell it later. We may not make much, but at the end of the day, if we're out of pocket nothing, it's pretty hard to be upset.